Hello, and welcome back to this beautiful YouTube channel. I hope you're already having a good time in this pleasant week. I hope you're already making massive profits from the financial market. My name is 𝗟𝗜𝗨𝗕𝗏, and I'm super glad to welcome you back to today's market outlook. All right, the market outlook is done once every week to cater for all of the global happenings, both fundamental and also to look at the market technically. All right. If you're new to this channel, please do well to subscribe to this YouTube channel, okay? EQ Markets Global. And if you want to know more about EQ Markets Global, log on to www.eqmarketsglobal.com to find out more about what we do, what we offer, a whole lot for you. Don't forget, we have amazing softwares as well to give out to all of the traders in our community completely for free. And these softwares have been doing amazing job for all of our traders. So don't forget to hit that subscribe button, also comment and share this video for your community, as it might be of help to every one of them. Okay, so let's quickly look at what we have for the fundamental aspect of what we'll be considering this week. So for this week, there is a whole lot piled up, all right, from Tuesday being tomorrow up until Friday, a whole lot of major news that are being piled up. But before we come into what we have for this week, let's quickly have a reflection of what happened last week. So yes, last week we had the flash PMI, the flash services PMI, both for the euro and also for the United States dollar, okay, and of which the readings were quite fair enough, still trading within the same zone as forecasted and also as previous for the last flash services PMI that was released. Okay, not so much to really consider on those ones. I think the major news for last week was the Bank of Canada tampering interest rates as well. Okay, and of which that comes here. That comes here. The Bank of Canada tapering interest rates hike by um 50 basis points. Okay, you can see the reading here. It grew from 3.25% rather, forgive me, to 3.75% by 50 basis points. So it simply means currently we have the Canadian dollar standing at an overnight rate or an interest rate of about 3.75%, which is a 50 basis points interest rate hike that was considered last week for the Canadian dollar. And aside that, we also were expecting a monetary policy statement that was supposed to be released on Friday for the Japanese yen, which was actually tentative, all right, but we did not see any reading out of that report for the Bank of Japan. And so the Bank of Japan is still standing at a negative 0.10% on 0.10% on their interest rates, which is still keeping the Japanese yen low in terms of performance as against other top currencies in the world. All right, so for this week, we have a whole lot of things that are piling up. And don't forget also, we are also still within the window of the Halloween trading. Okay, so you maybe need to find out a little more. I think this is more most of the time in previous years and previous data that we've looked at, the Halloween window is mostly the time where we have stock crash, we have a lot of crash and fall in prices in the market. So you might most likely want to read more about that online. All right, so for this week, actually, we're having from Tuesday a whole lot of high impact expected news up until Friday. So let's quickly run through them and take a look at them. So for Tuesday, we will majorly be looking at the Australian dollar trying to tap our interest rates. Okay, no, that's sorry, yeah. So we will see the Australian dollar, yes, actually trying to tap our interest rates by 25 basis points. As always, we've always known the Bank of Australia to always, the Reserve Bank of Australia rather, to always taper interest rates by 25 basis points. I mean, it's it's more like synonymous to the Australian Bank, Reserve Bank of Australia. All right, so that is going to cause a whole lot of volatility, as we always know, in the AUD pairs. Okay, and also we would be also expecting the job opening and labor turnover survey by 3 p.m. on Tuesday, which is tomorrow. Okay, we'll be expecting that as well, which is most likely to also cause some form of volatility in the market. All right, so going forward, we would also be looking at on Wednesday the Federal Open Market Committee having to give their report and also to have their meetings. Okay, of course, we always know, as always, that the Federal Open Market Committee is the committee that sits over a lot of affairs that affects the U.S. economy and also citizens of the economy. And so this is also going to cause a large volatility, most likely based on the decisions and votes that they will be giving as regards a whole lot of things that will be happening in the meeting. Okay, so that's going to cause a whole lot of volatility as well, and we most probably would want to look out for that. Then also we will be having the Great Britain pound looking forward to taper interest rates by 75 basis points on Thursday, November 3rd. All right, and that will be coming by 1:30 p.m., about 1:30 p.m. or 1 p.m. or so on Thursday by Nigerian time, I mean. All right, by 1 p.m. on Thursday, November 3rd, we will be expecting a 75 basis point interest rate hike on the Great Britain pound. If this truly comes to play, it simply means that we would most likely see also the Great Britain pound begin to perform really well. But at the moment, I think the Great Britain pound is sitting number 4 on among the top performing currencies with high interest rate hikes, okay, over the last period of months that we've actually looked at it. Then the big one comes on Friday. Yeah, that's where everybody will be looking out for. The big one is actually comes on Friday, which is the non-farm payroll. All right, so last month we saw over 263,000 people being employed in US. This month we're forecasting about 200,000 people to be employed in the US, and of course that figure is actually low. I mean, we're looking at this figure here. This is the forecasted. If it is 200,000 people to be employed in the US for this month, it simply means it's lower than what we actually saw happened last month. And that might also have some form of low impact. I don't really know, but it might not have so much impact in the market. But this is forecasted, all right? So it does not mean that it's going to be the actual. So we would watch out for what exactly is going to happen. Of course, we have FOMC, we have job opening, labor market turnover, all before the non-farm payroll. So a whole lot is going to happen before this week Friday. We're going to be having the non-farm payroll. So for me personally, I still see job employment rates more than 200,000. I think above 250 or even more, to cause a whole lot of massive volatility also in the United States dollar pairs. All right, so that's all we have for the fundamental part of our analysis. We are going to look at the dollar index, how it's performing, and from there we will be able to go back and consider a few pairs that we would be looking at in the market. So let's quickly look at the dollar index. Let's quickly look at the dollar index and how the dollar index is performing. So when I looked at the dollar index, I noticed something really amazing. All right. So for the technical aspect of it, I mean to say, noticed something really, really, really amazing. All right. So let me show you that. All right. So this is a nice movement that has been happening on the dollar index. Okay. This is a very nice movement. The market broke through. The market broke through this zone, came back retested, bounced up, came back retested. again. The question is he ever going to retest this same zone, this same minor trend line that is playing out here? Is he ever going to retest it again? Or the second question is, if it comes back to retest this particular trend line, will it break below this trend line? Of course, everybody is looking out for the dollar to start getting weak. All right. In fact, a whole lot of people say the dollar is brewing. The weakness of the dollar is actually brewing, and of course there's no dispute about that, but we need to also look at the short-term movement of the dollar and also the medium-term movement of the dollar while we wait for the full weakness of the dollar. So at the moment, we're going to spot out at the moment we're going to spot out what is most likely to happen in the dollar. So I'll give you my opinion. Okay, I'll give you my opinion and we will run with that as well. All right, so if you look at the dollar, okay, if you look at the dollar, it has actually enjoyed a nice bullish movement. It has actually enjoyed a very nice bullish movement up until this moment, and then we see actually a weakening dollar, all right, so to say. But what is most likely to happen for this week is, for me personally, all right, and based on what I'm looking at, I can actually find a a demand, a supply zone rather, around this level, which is 112. All right, at 112 I can actually see a demand level at that point. So what is most likely going to happen is we might still see a strengthening dollar into the 112 zone, and of which, if that zone is not cleared out, all right, we would see a retest back into this trend line, and a break in this trend line would most likely lead to the dollar, the continuous falling of the dollar that we have long been expecting. But for the short term, for this week, we would see a strengthened dollar. It simply means for pairs like the USD JPY, we might still most likely see a short-term bullish movement. All right. And for the long term, if these zones are being cleared out, if this particular trend line here is being cleared out, all right, and the dollar begins to trade below this trend line, then we would most likely see a massive sell-off in pairs like the USD JPY and a continuous bullish movement in Euro USD, GBP USD, and we were just going right into that as well. So let's take a look at a few currencies and also what we think of them. Let's start with the Euro USD. So for the Euro USD, actually, we've enjoyed a massive sell-off for a very long time. As you can see, this is on the daily time frame. We've enjoyed a massive bearish rally to even trading below parity, currently still trading below the 1.00 price level. So let's quickly see what is most likely going to happen for the coming week ahead. So for the coming week ahead, what we most likely will be seeing is a sell-off in Euro USD back into this zone 0.98711. Okay, we would see that sell-off continue to into this zone. All right, if it breaks below this zone, then of course we will be expecting for Euro USD to come into 0.97377. That is that actually has a lower percentage of happening. But of course, this is the financial market. I see this zone as a support zone, right? Which simply means that most likely, if prices breaks this supply zone, this demand zone here, we would continue to see a fall into the 0.97377. But if that doesn't happen, then we will see a consolidation somewhere around this same zone back into this trend line, and of which we would see a bullish movement. That is, a consolidation simply will tell you that it simply means the dollar index is still moving into the 112 zone that we earlier talked about. So this is what is most likely going to happen for the Euro USD. A retracement back into the zone and a consolidation to follow it back into the trend line, and of which we have a bullish movement. For GBP USD, we would be looking at also a little retracement back into this trend line, and then after that retracement okay, back into 1.143030. All right. After that retracement, we will be expecting a continuous move to the upside. So long as this trend line still holds, already we can see we are having a golden cross on the 4 hours time frame. Should we bank on that yet? Not so fast. So let's look at what is most likely going to happen. A retracement back into this particular support zone. You can even find it here. I think I mapped it out. So let's quickly look at it. All right. This particular zone was a supply zone, and now going to be acting more like a demand zone. So yes, prices will most likely fall back into this zone, have a little consolidation, of course, because of the USD and the dollar index we've talked about, and then back up. And don't forget, we're also expecting a 75 basis point interest rate hike on the GBP this week. If that happens, then the GBP will most likely have a whole lot of strength. It's against the dollars, and we will see a bullish movement, a continuous bullish rally on the GBP USD. All right, so let's quickly look at other pairs that we would be talking about. Gold, yes, gold is really doing well with its amazing downtrend movement, back up, and bounce off, and all that stuff back into the zone. But if you notice carefully, this particular zone around 1617 is a very significant level that we cannot do without on gold. So yes, sometime in the month of August, it has come to test this particular zone here. All right, sometime in the month of September, rather, it has come to test this zone here. And then fast forward to October right now, it came back testing the same zone here again. All right, we would most likely see in the coming week, okay, gold coming back to retest this zone. If it doesn't break this zone, then we will see a pull up back into back above this particular level here. All right, back above this particular level here, which is 1670. If it goes well beyond 1670, we would see gold coming back to retest this significant resistance level at 1730. But if it breaks this 1617, right, then let's expect a retest of that zone and then a massive sell-off on gold. So that's what is most likely going to happen on gold that we're looking at for this week. Let's quickly look at USD JPY. So yes, like I said earlier, because of what we're expecting to happen on the on USD, okay, currently USD is still the dollar index is still moving higher. We would see, okay, let's go over to the 4 hours time frame. Right, so if this zone is completely cleared out, then let's expect prices to come into this particular resistance zone at 149.407. But I don't know why I'm so confident that most likely if prices come into this particular zone here, we would have a massive sell-off on USD JPY, as the dollar is also going to add air and get weakened a bit. So that's for USD JPY. Let's quickly look at some few indices as well. So the Nasdaq 100 as well has been enjoying a massive bearish rally, and of which that has actually been on since 2021, and it had actually enjoyed a massive rally retracement, another massive rally. So in this week, what we would most likely be expecting on the Nasdaq 100 is a fall. All right, we'll most likely be expecting a fall back into this support zone at around 10,668, and from that zone there, we will be expecting a bullish pressure come in. The bulls will quickly, rapidly go into the market and buy a whole lot of the Nasdaq 100 or invest into the Nasdaq 100, and we would see a bullish rally into the 12,758 zone. Okay, so that's what is most likely going to happen on the Nasdaq 100. And then also on the Dow Jones, we would most likely experience a retracement for this week. So we watch out for that retracement, especially to occur for this week. All right, a retracement back into the 31,321 zone, and of which from that point we expect a continuous bullish movement on the Dow Jones. That is the US 30 rule. So these are the analysis for this week. I hope this all makes sense. Don't forget to smash the subscribe button, turn on the notification bell so you get notified every single time we post meaningful content as this one. All right, see you next week, Monday. And don't forget to recommend this channel to your friends as well.